Hey everybody, in this video, I'm going to walk you through exactly what you need to do and how you can trade or actively manage your portfolio and work a full-time job. It doesn't matter if it's a trade, manual labor, or more white collar thing, more of an office job. This framework can work for you. Okay. There are 4 parts to it. I'm going to go through in detail exactly the 4 things you need to do and put in place so that you can actively trade or manage your portfolio and work a full-time. So before we get into it, a little bit about myself and why this information should be valuable to you. I retired from working full-time as a management consultant. I was working 60 hours a week or more, traveling to and from client sites every single week, in and out of meetings all day. I didn't have time to sit around and watch charts, watch screens, look for a move and try and time myself, day trade, what people normally think of when it comes to trading. Okay, I was lucky if I found 15 to 20 minutes a day to be able to look at the market. Okay, I was able to find a system, put together a strategy that allowed me to work around my schedule and still have time to fit in active trading and growing my wealth on the side. It was so successful that I was actually able to retire from working as a management consultant at age 35, which is now 6 years ago, okay, and be completely financially independent and get out of the corporate scene, okay? And that's what I want to pass on to you today. The framework that I developed then, plus the knowledge and experience I've gained since then to help you find whatever it means in terms of financial success for you. So let's get right into it, okay? Before we get right into this, if this is the kind of thing that's interesting to you, you want a little bit more information here, I put a free PDF in the description down below. You can download this exact framework, download and get my notes, get a cheat sheet so you can implement this yourself and see if you have any other questions or things you'd like to modify or build off of. Okay. So getting started, the first thing you need to do if you're going to try and trade while working a full-time job, you need to understand when is it safe to trade. Okay. Because I'll tell you right now, what most people think is you're always buying and selling. Every day you buy, you sell. That's not how it works in the market. There are times and periods where it's safe to trade and where you should be taking trades. And then there are times and periods where it's not safe. The market is volatile. There are big events coming up, and it's better to just sit back on your hands and not do anything. Okay. Think about trading or actively managing your portfolio like surfing. There are times when the tide's coming in, the waves are great, the sun is up, it's shining, and it's great. You go out and you surf and you have a good time. There are times when storms come in and the tide's going out. And yeah, you can technically surf, but it's dangerous and the risk of injury or losing your life or blowing up your account are really high. In those times, you want to stay away from trading. Don't manage your portfolio, sit in cash, park your money in an index fund or bonds or something, and just come back when times are safe. Okay. That's the first thing that you need to be able to do. I need to learn how to do if you're going to start managing your money and being active yourself. So when it comes to how do you know when it's safe to trade? Okay. There are 3 things you need to look at. Okay. And doing these 3 things every day takes less than 5 minutes. Okay. So this is step 1, takes 5 minutes. We're going to go to QQ. Okay. This is the NASDAQ 100. Okay. And we're going to look at one thing. This is the daily price action here on the chart. I apologize for the lines. Okay. We're looking at this red line here. This is the 20-day simple moving average. Okay. The first thing we want to look at is price for the day above this red line. If it's above this red line, is the red line increasing? So is the 20-day moving average today higher than the 20-day moving average yesterday? If both of those things are true, it is safe to take new trades. Okay? It is safe to take new trades. All right? Well, if both of those things are not true, and they both have to be true, can't just be one or the other. If one of these things is not true, or none of them are true, it is not safe to take new trades. But if you absolutely have to, if there's something that you just can't resist, the modification you make is you cut your size in half. So if you would normally buy $1,000 position, you only buy 500, okay? And you take profits much faster. So you take profits twice as fast. If you would normally take profit on a 10% move, now you take profits at 5%, okay? So that's the rule, and then that's the adjustment. What I would recommend if you're new and you're just figuring this out, if you don't meet both of those criteria, price being above the 20-day and the 20-day moving up, don't trade. Just don't trade. Okay. The other thing we want to look at, still on QQQ, is this yellow line here. This is the 200-day moving average. Okay. The 200-day moving average is our general market trend. If you're ready to see the full detailed breakdown of this videos and gain access to the same system that allowed me to retire at 35 while working a full-time job as a management consultant, then you need to be in the construct. Inside the construct, you'll get access to over 100 hours of educational content, daily live streams, and my personal trading framework. Click the link in the video below to start your free trial in the construct today. Okay. It is our general trend for the market. It's the 200-day average of price. So it covers about 9 months, somewhere between 9 and 10 months of data. Okay. As long as price is above this, you should be looking for long positions. Okay. And the general trend of the market is, okay, if price is below the 200-day moving average, you should be in cash. Okay. So if price goes below the 200-day moving average, you should close any position that is not profitable. So if you have 10 trades or 10 active positions and they're not actively profitable, okay, so maybe you're trying to ride out a little bit of a drawdown or something and hoping that it keeps going. If price on QQQ gets below the 200-day, you cut them. You get rid of them, okay? So then the question is, okay, what if price is below the 200-day moving average, but above the 20-day and the 20-day is rising? You can take new trades, you can take new positions, okay? But we'd go with one of the two modifications before, not both, but one of the two. You either size down or take profits a little more quickly, okay? Because this is a transition period, okay? The market is not yet fully recovered. The ideal market scenario, like we have on a screen here, is price above the 20-day and the 20-day moving up and above the 200-day. Okay, when all three of those things are positive, all three of those conditions are met, it's a healthy market. It's still risky to take trades, right? Like it's always risky to trade, but the risk is considered normal volatility, normal risk. Okay, there's not any added risk or added volatility that you need to consider. Okay, so if it's between the two and price is rising, you can take trades, but you want to be careful. If it's below the 20-day and the 20-day is going down and it's below the 200-day, absolutely do not want to take any trades whatsoever. Okay. That condition is very poor. So we would look at here, this is March of last year. Price was below the 20-day moving average. The 20 days going down. It's below the 200-day moving average. Okay. We do not want to be taking trades there. We want to be in completely cash. Okay. So that's the first thing you need to look at. And this, look, it takes 5 minutes to walk through now, but once you get used to doing this, it takes literally 5 seconds, right? You just pull up the chart, look at the price, and honestly, you'll know where it was yesterday when you start doing this daily. So this won't even take 5 minutes. But when you're new, you need some time to look at it, okay? The difficult piece comes, if you look at this period on the chart here, from October of 25 through February of 26, when price is going back and forth, okay? When it's above and then it's below, and the moving average is going down and moving average is going, okay? During these periods, it is very difficult, okay? These periods don't happen often, but it can become very difficult to trade here, okay? So I am putting that out there. This is not a panacea, okay? This is not telling you for sure you'll make money. There are going to be times where this is challenging, okay? And trading is challenging, okay? So be forewarned there, okay? Number two, the second step here, what do you need to trade, okay? The first piece is, when is it safe to trade? The second piece is, what do I trade? How do you know out of the 17,000 stocks on the New York Stock Exchange or whatever stock exchange you're trading, right? Maybe it could be the Indian market or the European markets or South America, what have you. How do you know what to trade? You need a screener. You need a way to filter out all of these stocks down to the highest quality signal, okay? For the purpose of this video, I'm using TradingView. I'm not sponsored. This video is not sponsored by them. FinViz is another one. There are lots of free tools out there. Maybe your brokerage has a built-in screener. I know Webull has, Thinkorswim has some screeners. Okay, so come up with a way to filter out all of the noise, okay? Because there's a lot of noise out there, okay? With that, don't listen to the news, okay? Don't listen to the news. Don't listen to your neighbor. Don't listen to what you heard at work. Honestly, ignore the shit you find on social media, with a couple of exceptions I'll talk about here in a minute. Find a screener. I'm going to give you guys the best one that I know, okay? And walk you through exactly what it is. This is my 20, 50, 200 screener, okay? It has 5, we'll call it 6 components here. So 6 criteria. The first one is price is over $5. This is because institutions don't buy penny stocks. Okay. In general, they don't. Some do. Yes. Don't come at me. Some will. By and large, institutions do not mess with penny stocks. That's a stock below $5. We're looking for institutional price action. Okay. So we need to eliminate all of those. The next thing, we want price over the last year to be up 200%. We want price over the last 3 months to be up 50%. So that's 50% for the quarter. Okay. And this isn't year to date or quarter to date. This is rolling the last 12 months and rolling the last 3 months. Okay. The next piece, we want the 20-day moving average to be over the 50, and we want the 50-day moving average to be over the 200. Okay. The last piece here is market cap greater than $100 billion. So this is large cap stocks and above. Okay. Large and mega cap stocks. We're filtering out micro, small, and medium cap stocks just for this screener. Okay. So run this screener. And as of today, Sunday, May 3rd, we have 7 names that pass the screener. So out of 17,000 stocks, we get 7 candidates. Okay. And then look, with 7 candidates, you can pull the charts up one at a time. Okay. But what I like to do, go to the 6-month view, look at the candles, and you go through and you look at the spark charts. Okay. And from here, you're looking for actionable setups. Okay. Now, really quickly, I'm going to pull the market cap screener off. Okay. And let's see how many we have now. 117. Okay. So let's say you have a screener and you get a few more than what I just showed you. Let's say you get 100 or so. How would you do this? Same idea. You look at the spark charts here and you're scrolling through and you're looking for a place in the chart where you can define your risk, define your entry, and you can enter the trade. Okay. And you can do that just by scrolling through here. This piece should take about 10 minutes. Putting together the screener, looking at the names that you might want to consider taking an entry. Okay. Names that you want to pull to another list, one that you actually watch. All right. And then once you have that list, you're looking for potential entry candidates. Okay. That is piece number 3 or part number 3. Okay. You know when to trade. You know what to trade. The third part is, when do you enter a trade? Okay. When do you enter a trade? That's where you need a trading system. Okay. So once you have a list of candidates, okay, so I'll pull them up here. Here's my orange list. Okay. So this would be a list of names that have passed my screener. It is safe to trade. And so now I'm looking for potential entries. Okay. I'm looking for entry criteria. All right. And so we're going to look at one here, XNDU, to really quickly go through exactly what this looks like. If you don't have a system, obviously I have one. I recommend you use it. It's my 5-rule system, right? Like maybe I can put this in the video, or like I can link it up in the top or in the description or whatever. Okay. If you need a system, or if you want an example of how a system should look and operate, okay, I'll give one to you. Okay. Use my 5-rule system. Okay. 5 rules. It's got 5 parts to it. First thing we want to look for is price above the 200-day moving average. That's this yellow line. Boom. Price is above the 200-day moving average here. Okay. This green arrow, by the way, marks when I bought XNDU. Okay. 2, we want to look for a level of price support. So this is a level where price has bounced at least 3 times. So it has touched it and been supported at least 3 times. So we can see here on the chart, we have 1, 2, 3 interactions here at around, 26.50. So there's our price support. The next thing, we want to see higher lows. So we want to see price move up and come down, move up and come down again. But when it comes down the second time, it's higher. Okay. So it doesn't come down as low as it did the first time. Okay. So we have here, look, a low on 21 April and then another low on 28 April. Okay. A week later, and it's higher. The next piece, we want to see lower high. So the highs are getting lower and the lows are getting higher and the highs are getting lower. So what's happening? Price is compressing here. Okay. It's compressing. That's what we're looking for. You can see here's a high, $42. And then here's a high, $36. Okay. So it's getting lower. At the same time, the lows are getting higher. Price is compressing. These lower highs give you a trend line. They give you a diagonal trend line. That's piece number 5. So price support. So we have 200-day moving average, price support, higher lows, lower highs, and then a diagonal. When all 5 of those criteria are met, we have a setup. Okay. We have a setup and we can mark our entry criteria. For this trade, the entry criteria here was this top line, call it 29.4, I think is the level. Okay. and that would have been a higher high. Okay. Hey guys, look, this clip is just a glimpse of the kind of research and education and training content we do in the construct every single day. To see the full version of this training and unlock over 100 hours of trading and investing educational content, join us inside the construct. I'll show you exactly how I leveraged these tools and techniques and my strategy I used to retire at 35 while working a full-time 9-to-5 job, working over 60 hours. From daily live streams to proprietary research, it's all waiting there for you, including a supportive community of like-minded traders and investors just like yourself. Use the link in this video to start your free trial in the construct today.